Who owns India's hospitals? In just 5 years, the ownership map of Indian hospitals has been redrawn. The once dominant doctor-promoter model has steadily given way to global private equity and sovereign funds, which now control many of the country's largest hospital chains. Since 2020, healthcare in India has attracted about $15.5 billion in PE and VC investments, with hospitals taking the lion's share at $9.2 billion. Between 2022 and 2024 alone, hospitals drew in $4.96 billion, accounting for nearly 40% of all healthcare deal value in the country. The list of recent transactions underscores the scale of this shift. For example, Temasek put $2 billion into Manipal in 2023, which then subsequently acquired AMRI and Sahyadri hospitals. Notably, Sahyadri has moved from one PE fund to Manipal, which is also owned by a private equity. So sold by Ontario Teachers Pension Fund to now Manipal. KKR bought a 54% stake in cancer care chain HCG from CVC for around $400 million. BPEA EQT invested $656 million in Indira IVF, making a major play in the single specialty segment. KKR also picked up a majority stake in Baby Memorial Hospital, Kerala, in a 2,000 to 2,500 crore deal. Most recently, Blackstone and TPG backed Quality Care, which runs Care and Evercare hospitals, merged with Aster DM, doubling its bed count to more than 10,000 in the country. The attraction is clear. India still faces a massive shortfall in quality beds and infrastructure, while insurance penetration and medical tourism are rising rapidly. These fundamentals have translated into strong returns. CVC, for example, exited HCG at 445 rupees per share after entering at 130 rupees per share, which is around 3.4 times in terms of returns. KKR's 2,120 crore investment in Max Healthcare in 2018 turned into a blockbuster exit of over 12,000 crores. Ontario Teachers Pension Plan exited Sahyadri with around a 2.5 times return, selling it to Manipal for a valuation of around 6,200 to 6,400 crores. P Capital has turbocharged growth. Bed capacity is rising sharply. 10,000 new beds were added in FY25 and FY26, with another 30,000 planned in the next 5 years. Financial discipline has also improved, with hospitals delivering around an 18% revenue CAGR from FY20 to FY24, while maintaining healthy 16 to 17% operating margins despite heavy capex. Technology adoption too has accelerated for Indian hospitals under PE ownership. 30% of complex surgeries, for example, in India, now use robotics, boosting both clinical outcomes and financial performance. Medical tourism has surged as well, growing 3.5 times between 2020 and 2024 to $7.69 billion and is set to nearly double by 2030. Yet, the PE playbook is not without costs. Investors target IRRs of 20 to 25% over 5 to 7 years, a horizon that can drive short-term profitability at the expense of long-term vision. Doctors warn that this sometimes translates into aggressive billing and a tilt towards commercialization in a sector which is built on trust and social responsibility. Few dispute that India's hospitals would not have reached today's scale without private equity. But the question remains, should PEs continue to own and drive healthcare platforms, or would this sector be better served if funds provided capital while staying a non-voting shareholder? India's hospital sector, in short, has become bigger, more efficient and globally competitive, but also more commercial.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, Follow CNBC TV 18 on all the social media platforms.